Hey, Paul, Mauro here. Smart Financial. Stop hiring financial advisors. Well, that's the topic for today, and I'm going to tell you why you should stop hiring financial advisors and who should. And at the end of this, I'll give you a 5-point checklist on who the right people are to hire financial advisors. Many of you know I ran a financial advice firm for about 50 years and sold off to our young partners. And I will just tell you that there's a lot of people who should not be hiring a financial advisor. And let's just talk about who those people are. And first and foremost, if you're a young person and you're trying to build wealth and you're following one of the 5 pathways to wealth, one of them is investing. And investing for a beginner does not require a financial advisor. And in fact, I will tell you, most of the financial advisors that are really good financial advisors won't even take you. They're going to say, you don't have enough money yet. Come back and see me when you have $1 million. That's not a mean thing to say. It's not the wrong thing to say. In fact, I agree with that 100%. A young person who's saving doesn't need to hire a financial advisor. You don't need them, you can't afford them, and it retards your progress. Don't do it. This is a little bit of a DIY project because you can do it yourself on a small scale. If you're a young investor, in this market today with technology, you don't need a financial advisor until you get to a certain amount of money or stage in life that I'm going to go over in a minute. And I'm going to tell you because I've done it. I've been in this for 50 years, and I've seen a lot of people come to us because they're nervous about money, or they don't know how to handle money, or maybe they're a financial professional nightmare because they're a doctor or a lawyer and they don't pay attention to money. Guess what? You can do it. I'm going to tell you how you can do it yourself, and then when it's time, I'll tell you when it's time to hire a financial advisor. So let's get to it. If you're a young person, in this day and age today, you can open a brokerage account. And I will tell you, we have our favorites. There's Interactive Brokers, Fidelity, Schwab, and even Robinhood is okay for certain people. And I'd say starting at the basics means that you should start saving young and start saving often. That means like on a monthly basis. Start saving automatically, tucking $1 away every week, and putting it into just a low-cost basket of securities known as a mutual fund or an ETF, something that essentially doesn't mean that you need to study up on buying one particular stock. If you buy a mutual fund in the Index 500 or an ETF, it's a whole bundle of stocks that are put together by professionals, and you get to buy into these investments very inexpensively, and they're very good investments to dollar cost average into. So the number one thing is you need to start young and start investing. Now, to do that, by the way, you don't need a lot of help. And the second thing is you should be investing through your employer-based plan. So investing on your own is number one. Number two, investing through your employer-based plan is really important. If you're employed and they have a 401k, a TSA, a 403b, these are all fancy names for salary savings plans. By the way, salary savings plans usually come with an advisor. That is the advisor to the plan, and they will meet with you and help you pick which things that are. You don't need to go out and hire a separate financial advisor. You can get this kind of financial advice because of the money you're putting into the 401k plan that pays fees to those advisors. So this is really important, and I think that you should take advantage of the advice that you can get because you're paying for it through participation in your employer plan. So the first part is investing on your own, and the second big part is investing through your employer-based plan and getting some input from the plan advisor, okay? Not your employer. Employers aren't allowed to give you investment advice, but the person who advises employees in the plan can give you advice, okay? Third thing is, when you get to scale, so you start off, you're investing in your retirement plan at work, you're investing on your own, a couple of bucks every month, and now you get to scale. Scale has a lot to do with your comfort zone. I will tell you, when you look at your bank account, you're going to make a decision. Does $100,000 make you nervous? Does $250,000 make you nervous? Certainly, a lot of financial advisors have a $1 million minimum, and some have a minimum that's less, between $250,000 and $500,000. There is a number at which, when you look at your own savings, that you'll begin to question whether you have enough expertise to do financial advice on your own. So I'm not saying that you should never hire a financial advisor. I'm saying that if you're young, don't hire a financial advisor until you have enough money built up. Number two, when you get to a certain scale, you get beyond the things that your local plan advisor in your 401k can help you with, and you think that you know all the parts of doing investing and advising, but let me just tell you, once you get to $1 million, it's a completely different ballgame. You need to meet with and take the advice of not only a financial advisor, a comprehensive advisor that doesn't just do investment advice. So there's an age and stage to do that. I would say most certainly at 50 years old, if you're a midlifer and you've accumulated $1 million of net worth, that is the time that you need to make that switch from not just getting investment advice to getting real comprehensive financial advice, what we now call longevity planning, for the people that are going to live the next 50 years from 50 to 100. Longevity planning includes cash flow, estate planning, guaranteed lifetime income, and it includes things like, how to invest properly for a midlifer, which is not the same as when you're 25 years old. So you think you know how this works, but when you look at the things that are available to people in their 50s, they're completely different than the needs and desires of somebody that are in their 20s. So when you get to this age and stage, that is when you should be hiring a total comprehensive advisory firm. Stop wasting money on advisors when you're young. Start using advisors when you're older, because according to the famous Vanguard study called The Value of an Advisor, if you have $1 million and you hire an advisor, the advisor is actually free. Now let me tell you what I mean by that. All right? You think you're paying for an advisor, but actually the cost of an advisor is absolutely wiped out by the savings that you make by these three things. This is called Advisor Alpha. It's a famous study. You can look it up. By the way, if you want a copy of it, you can email us. We'll be happy to email that to you. It's a great read. Advisor Alpha means the extra return you get from using an advisor at $1 million. It's tax savings, because advisors do tax managed plans. It's allocating properly. Keep in mind, if you're 50 years old, you shouldn't be allocated like you're a 25-year-old or a 75-year-old. Allocation is really important. And then management, because some things require lots of management, like equities. Now, I'm not a big fan of paying advisors to manage the fixed income position that isn't going to do anything for the next 20 years except sit there and provide stability. We've talked about this. We can help you cut your advisor fees in half by having them manage your equity portion of your portfolio and getting your fixed income portfolio managed for free. That's a way to save portfolio management at half off, which happens to be one of the chapters in my second book. So here we go. In order to keep up with us, we want to make sure that you subscribe to this. We're going to have a few more inputs on how you can hire a financial advisor at the right time for you. And you can get more information about this, by the way, if you attend one of our live meetings that we're doing in Portsmouth, New Hampshire, Providence, Rhode Island, and then in September, we're having an economic forum in Newton, Massachusetts. And our first 100 subscribers are going to be able to go to that for free. Make sure that you hit the subscribe button. And if you have a friend who's a midlifer, who looks like the person who should be hiring an advisor, you should do them a favor and forward them this video, and they can follow us on Smart Financial and find out the smart way to hire a financial advisor and when you should not have a financial advisor that you're paying money to. And I'm Paul Mauro, and hiring an advisor at the right time is just part of the art of being smart.